Hey, we made it. What's up, everybody? It is a very happy month of June to all of you. We made it through the holiday weekend. Most people were calling for doom, and it didn't happen. So, from that perspective, pretty good. I think, anyway. I continue to look at this chart of Bitcoin, and I keep going back and forth. There he is. Noted. Yeah, it didn't happen yet. Yeah, maybe. I just see a lot of bearish sentiment out there, and it's Zane. Good to see you. And it's interesting. ES is not looking good right now. We talked about this last time, and we're like just like nuzzling up near the top there. And I don't know. The good news is I don't have to know, right? Like I don't have to know. I think that we go higher, but at the same time, there's some crazy stuff happening right now. And if you protect yourself and keep yourself with stops in place, who really cares? Let's just keep playing. But regardless, I'm excited to jump in here and talk with you guys. I mentioned before we're going to do some technical analysis overview today. Get started down that path. I think it's going to be really interesting to kind of talk about this stuff with you guys. I'm going to lay out what I plan on covering here, and I'll be adding to over the days, weeks, months, and making sure that, you guys get what you need out of our conversations. I do a lot of posting and grandstanding or whatever about calls that I've made or that have been made, and it's just a little bit silly. I'd rather teach you guys how to do it yourselves, and then you can bring me setups. It'll be really good. So I'm excited to jump into this stuff. I wonder, like, just out of curiosity, how many people have actually taken some form of like formal education? I know we don't have a ton of people in here. It usually takes a while for people to kind of roll in. But those of you who know about technical analysis now, hey, Dan, what's up? Where'd you learn it from? I'm just curious, because I'm going to give a little bit on my background here in a second before we get started. But if you have some background in TA, where'd you get it? Yeah, that's not shocking to me. Nagasaki, that's cred. If you look at his videos, he's got like hundreds of thousands of views. Ataxia and me, all right, that's good. The interesting thing about TA is like what it is and what it isn't. And when I first started getting into it, it was like, let's try to learn everything. Let's try to get every tool, every indicator, everything. And it completely, as time has evolved, I started trading in 2013. I've taken stuff away. Because you get to find that, like, in certain situations, some things are relevant. In other situations, it's not, right? So let me go to this. So we're going to hop into this. We'll talk about the market a little bit. But I think that it's a good stage to set on what technical analysis is. And in my opinion, and with most people's opinion, it's risk management. So It's a way for you to put on a trade with an expected outcome being one thing and protecting yourself against another, right? A way to open and close trades. Otherwise, you're literally just throwing darts out there. And the problem is, which I'm jumping ahead here, this you can see on my screen, a lot of people over the past 2 months, 3 months, 4 months, 5 months think they're really good at TA. Because it's been the easiest market of all time. Like the easiest market of all time. Put on a trade. Like look at anything. Let's go back to January. On January 1st for Bitcoin. Yeah, you're absolutely right, Naga. The open for Bitcoin was 28,976. Anybody who bought on January 1st, even though we've jumped a ton, is still in profit. Like it's just been crazy this whole way up. The whole way up. I mean, Ethereum's even more ridiculous. January 1st, open, $737. All the way up to 4,400. And yeah, we're down near 2,500, but everybody at the start of the year, if you held Ethereum, you're in profit right now, which is nuts. Absolutely nuts. So I bring this up knowing full well that this will be probably the least exciting conversation when it comes to TA of all the ones that I'm planning on doing. Okay, so my plan for today is to kind of run through what's on my sheet here, talk about a few things, and then kind of run into what I will be covering as time rolls on. So let's do this first. Let's kind of run through the curriculum so we can talk through it. So TA is risk management, and I'm going to kind of dip into all of the stuff that goes along with technical analysis that has nothing to do with trading. Okay? That has nothing to do with trading. So discipline and patience, operating without bias, managing your emotions, reasons why traders lose, how to develop a plan, how to track your results. How do you know, like, are you planning or are you just putting on trades? Look, right here, my name, JM plus expected value. I want to talk about what plus expected value is because I think it's worth the conversation. And I view that as putting yourself in the right situation to put on a trade, and putting yourself in the right situation is being able to evaluate to go, is this worth me doing something right now? Is the reward there on a large enough scale for me to actually do this? And it hasn't been lately. So I haven't really been doing much. So we'll go through expected value. And then what I'm planning on doing in more in-depth moving forward is going to be all purely technical stuff. I'm not going to do this today. We're going to touch on it. But use of time frames, determining trend, how to identify support and resistance, the chart patterns that I look for personally, how to identify a trading range, what moving averages to use, Fibonacci retracements and extensions, how to use volume as an indicator. Right here, number 9, like the price action segment I was working on this morning. I mean, this could be a week of material and people still wouldn't get it. And it's the biggest issue that people have with trading. It's the reason why people get rinsed. It's the reason why people who know technical analysis still fail. Is price action and triggers, and understanding how to determine relative strength, and like setting up your trading setup for you. Okay, like that's everybody's different. What my charts look like, what your charts look like, will be very, very different. So that's a lot. And like I said, all I'm planning on doing today is just kind of going over this first page in a little bit more detail, and just kind of talking about the psychology of TA, and then setting up what we're going to talk about in the future. So those are those things there. So discipline and patience. this is like crypto is viewed or like kind of almost laughed at. I don't know if laughed at's the right word, because the impulsivity of what we do. If you watched the Up Only episode the other day, when Brian Ledger asked CZ and Sam about 100x leverage, 125x leverage. Why do you guys do that? And they both kind of like pivoted. Oh, well, you can't really do it for a lot of money if you're going to do that level, or if you're going to use that level of leverage. You have to reduce your amount. It's like a inverse curve on how much leverage you're going to use. I look at leverage as the like trading embodiment of a lack of discipline. I think it is. I am trying to get everything I'm going to get my blood out of my stone right now. I want this right now. I'm going to hit it. And you go and you look around like chat rooms on Telegram. Guys, what are we trading today? Got to get done today. Like the biggest reason why people fail, even when they have the knowledge of TA, is they lack discipline and patience. And what goes hand in hand with that is this. This is going to sound interesting or be interesting. People try to pull a salary out of the market. Have you guys ever done that? Try to pull a salary out of the market. I'm going to make $5,000 this week. Well, if you have the result in mind going into starting your trade, it's really, really hard to not force things, right? I got rent this month. I got this, that, and the other. Like, I'm going to put this stuff on. You are being impulsive to the nth degree. So how do you manage that? And this is where most people screw up. I'm going to pull this money out. If you are starting with the focus of how much money you're going to need, you've already lost. And that's the counterintuitive part about trading. I think trading is the most exciting profession, I'm going to call it a profession, in the world. Not everybody that trades is a professional, but if you take a professional approach, it is the best thing to do in the world. Not even close. Everybody remembers that group project in college or high school or whatever where where you hopped into a group and you had to be the person that stepped up and got it done, and some asshole was free riding on your hard work. I've been in sales most of my life, and the amount of money that I've made for people that I work for has always kind of chapped my ass. Hopefully they're not watching. What I like about trading is I can control 100% of me and my results. It's all on me. I can't blame anybody else but my own. So if you can have that level of discipline, you can get into this trading. Like it is the most rewarding thing in the world. It is you against the market. And a lot of people say they want that, but then when they get into it, they can't. They can't do it. Then it becomes the excuse game. Oh, I got wicked out. Oh, this sucks. I can't believe this happened to me. The total bullshit. I got scam wicked. Oh my God. I had the greatest entry and I got scam wicked and then it ran away from me. Ah, such bullshit. I can't even say like how telling that is to me when I see people talk that way. No, you fucked up. Like you fucked up. That's all it comes down to. You fucked up. You either got your stops wrong, you didn't allocate how crypto works, or you were just like throwing a dart at the board. Like, yes, sometimes you get the triple 20. Sometimes you get a single 2. Okay? Like you're throwing a dart. And if you can't identify skill versus luck, and if you're asking for favors from the market, you're more than likely going to lose. So without bias, operating without bias, I'm going to go to this screen. Without bias, take a look at the screen. Take a look at the screen without bias. What do you see? It's ready? What do you mean, Zane? It is so hard to stay bias negative. Yeah. Remove the ticker. Right. From the background so you can't even see it. Yeah. I don't look at that stuff. That's just me. Shortcut for inverse chart on trading view. Yeah, here we go. How about now? Yeah. Yeah, Z does post without tickers. That kind of annoys me sometimes. But but I get it. This is the way that I try to keep myself balanced when I'm looking at high time frame charts. Okay. What do you see now? I don't know. But here's the point. Like, the point is you have to be able to take a look at both sides. And that's really, really hard. Particularly for people in crypto. Like, let's all take a step back for a moment here. Like, who that is in this room watching isn't a macro believer in crypto? Like, aren't we all? And seriously, if you're not, say so in the chat. But like, I'm pretty sure we all are. So it's really hard when you think that your macro thesis on crypto is number goes up and you are met with information to the contrary on a time frame like this. Okay? So let's go back. Here's the actual Bitcoin chart right now. And can you look at this without bias? So part of me says, all right, higher high, higher low, higher high, higher low, higher high, higher low, higher high, lower low, lower high, lower low. Is that a downtrend? Maybe. Part of me also says, well, look, on a large enough time frame, lower low, or I'm sorry, higher high, higher low, higher high, higher low on a weekly time frame. So which is it, guys? Let's look at the monthly. What does that look like to you? We're talking about bias right now. That's all I want. What is your bias right now? If I were looking at this unbiased, that's why I don't have any of my drawings up here. What does this look like? Blow off. It looks like a penis. Fair enough. How about now? Are you longing this? This is the inverse. Are you longing this? This is the monthly inverse on Bitcoin. So longing here with an inverse chart would be essentially going short, right? It would be hard for me. Yeah, 3x long. Up red candle is, yeah, it kind of is like PooCoin. So it's hard to not think like, you know, the 50-day might be the best bet. You could make a case that there's not a whole lot in the way until we get to 20 grand. I don't disagree with you For the record, I came for the chicken. Like, I have not sold. You guys know how I am. Like, this to me, this is a virgin mid on a turn of price on an inverse. Okay. Like, that is almost always a short in this situation, which would be a long. Okay. Let's go back. So you have to look at this from every perspective and say, are we ready to go? The reason why I'm not calling for crazy stuff to happen right now is this. So I use indicators, momentum indicators. The 3-day has been essentially in a downturn for, when was this? Since February 21st. We have had lagging MACD for months. Here's the other thing I'll say. If you see this turn up, this MACD turn up, I'm going to feel really good. So again, like the ability, can I flip this too? No, I can't. I wonder if I've never ever actually tried to flip the indicator. Keeping your bias open is hard. Okay? And people can't do it. So a lot of people get stuck in Bitcoin to the moon. And even when you are presented with negative information, you can't shake yourself out of it. Are we being presented with negative information right now? Well, it's inverse, so I guess it'd be positive. But like on a 3-day, all right, this might be a high or low. If we can turn this up, here, honest to God, it's almost like conditional logic for yourself. If this ends up happening where we stay here and like futz around and go up and the MACD turns with it, I'll see you guys at 100 grand. I will see you guys at 100 grand. However, like Naga talked about cred videos, if we do this, I'll see you guys at the poverty line, okay? Like this 32 and 20, like if we have some shit like this happen, or quite frankly, like an impulsive move back up here, trying to not draw further. An impulsive move that isn't supported by anything other than just price, just like whoop, whoop. Like I'll short the bejesus out of that. Okay? I came for the chicken, just asked, do you see 100K BTC this year? Sounds like you might be a little skeptical. What I'm trying to tell you is I have a thesis in my brain for Bitcoin going to 100 grand. I have a thesis in my brain for Bitcoin to go where XO just said, to $1,000. And I do everything I can to remain bias neutral. My biggest indicator of like somebody who is rooting for their position is when they seem inflexible. Okay? OD Ryan, how do I understand this language? Just ask whatever question you want to ask and I'll try to answer it. But the point is bias neutral. That's why you take it. It's like naked charts, man. Take everything off. You can even take this off. We'll take all this shit off. All right. Like, what do you see? It's hard to know. I have no idea what you're saying. All right. Well, I'm just in a bit of an overview right now if you missed the beginning. So what I'm talking about right now is operating without bias. Keys to being a successful trader, having discipline and patience, operating without bias, and managing your emotions. And here's the thing, guys. I struggle with this. Raise your hand in here if you've ever revenge traded. Say something in the chat. Put in a stacked emoji since we got a lot of subscribers in here. If you've ever revenge traded. Yeah. Yeah. I've done it. Always. It's really hard to do. With leverage too, man. Yeah. Revenge trading with leverage. Like the best shit that happens to traders and they're like, I don't know why I'm not profitable. Well, I've been revenge trading since 2018. I don't know why I'm not profitable. I don't trade on leverage. Except for when I'm revenge trading. Aha. So, yeah, revenge trading, like, it happens all the time. So, managing your emotions, it's so difficult. And the reason why it happens is from what I just said at the beginning. Like, if you're trading based on how much money you need, then your emotions are too close to the vest. If you lost a certain amount in your account and you had already internalized that money and now it's gone, but they were paper profits and you're trading to get it all back, like we joke about it all the time. Make it all back in one trade, guys. Yeah, revenge trading is making it all back in one trade. So let's say, like, let me give you an example. This is a perfect revenge trade situation right here. Let's say you bought this dip at 33 grand and you're like, I caught the low, baby. Let's go. Big time leverage. Price went up again, went up for a day, and you're like, all right, I made it. And then you can see here on the 23rd of May, we went all the way down to 31 grand again. You got knocked out. But you weren't at your phone at the time. You weren't at your computer. So you got absolutely knocked out. And so at this moment, yeah, this actually might be a pretty good example. Yeah, perfect. You got knocked out. And so you think to yourself, shit, I get back to my computer. Like, I got knocked out of this total bullshit. This thing's going to go the other way on me. And, oh my God, it's running away. It wicked me out. My stop was right here. I entered here. My stop was right here. Oh my God, it's total bullshit. Oh my God. So what do? Open along there in a terrible area. And you go, I'm not going to let this knock me out. No, sir. And so you open a revenge trade. Just on too much leverage. And you end up getting knocked back out. Because price ends up coming down. Right? I didn't actually look at that to see if it would. Let me see. Go to another screen. Yeah. It's coming. So, I gotta speed up my, there we go. By the way, if you ever really want to test yourself, it's paper trading, but, you know, give a look at, there we go. Here comes liquidation right there, based on where we longed from. Oh my God, no. Because you made a terrible decision after you got knocked out on this long. Longing here, revenge long, came back down, knocked you out. Okay? It happens all the time. It happens all the time. See, this thing can keep going. We should be pretty close to par here. There we go. Okay? So you got knocked out earlier today. The reason why people do that is you internalize the money or you needed the money. And I remember early on when I first started trading, never use a stop loss. Not advocating that either. But position sizing matters, okay? And if your position sizing is off and you didn't have a plan when you entered the trade and you're letting your impulses get ahead of you, what did you expect to have happen? Okay? So I'm kind of rolling these all into one. Like, why do traders lose? Let's go back and take a look. On the simplest form, okay, if you were entering down here on whatever, this wick down that knocked you out, you could say that R is 39,000. Did you even have enough room to put on that trade? Was it worth it to you to take it on? And those were people like force trades. Like, I'm just going to jam this trade in there. What was your risk reward? Like, yes, we are theoretically on a high time frame up against support here. But I would not long at 36,000. I think Manuel was near. He may not be anymore. But like, where would you, if you're like, if you really wanted to try a long, I'm asking for long bias only, where would you actually try to long right now? Probably 30 grand. You could actually feel good about that. Yeah, 32, 32. I can see that. Actually digging down into it, that's not what people do. They force trades because, oh my God, like there's people that longed this, man, at 40 grand after this dip down. They were like, shit, it's running away from me. I'm going to do it. And then they saw their position go against them for $7,000. Was the trade even there for you? I don't think it was. So knowing how to control your impulses, having a plan ahead of time. Like if you were going to say, I'm going to long 32. I'm going to pull up a fresh Bitcoin chart because I don't want to screw this up. Bybit, why not? Delete everything. Perfect. Yeah, pretty much, Manuel. That's what I was thinking too. Like that'd be the best one. Like you, all right. So you can make a case for 32, and I'll pull that over. Where would your stop have to be for you to not have any heat on a $32,000 long? $30, probably not enough, right? Like I could easily see that rip down. Is it 28? 28.8, 28.6, 28.5? Right. So you got to bring it down further. So even if you caught that and you're going to play it up to the next logical point of resistance for your stop to not be stop hunted, you're less than 2R. That is not good. Yeah. Put your bids where your stop losses would be. Unironically, phenomenal advice. Okay. Like, unironically, really incredible advice. Put your bids where your stop losses would be. Because what usually ends up happening, as we talked about before, yeah, don't use high leverage when you're trading against trend. Well, you know me, my feeling is don't use high leverage ever, but certainly not against trend. And when you do, it scalps in and out. What I typically determine to be a pure trend are 3 flips down, okay? Lower low, lower high, lower low, lower high. Probably a downtrend, okay? On a daily, certainly on a lower time frame. Okay. Did you have a plan before you put in the trade? And was there enough to justify that trade? Probably not. So like Keyboard Monkey was responding to Rookie earlier today. Rookie was like, on the plane to Miami, lost 100 grand in 15 minutes. Damn it. And then like an hour later, did it again, lost 200 grand now on the flight. And Keyboard Monkey was like, what are you doing? Like, go buy shoes. Like that was the plus expected value wasn't even there for that. You just forced that trade. What are you doing? And that's what people do. Like, you can look at this and say, oh yeah, it looks like it's where we need to be. I'm definitely going to long. Yeah. But that's throwing a dart at the board. Like, what are you actually trying to accomplish here? Unable to take a loss is the most mystifying thing I think I've ever seen. Let me get some unable to take a loss stories in the chat because we got some OGs in here. What's your worst story of it? Naga raising hand. Yeah, I got you. Raising hand. 2018. Yeah, that's right, Dan. You said you were in and you held all the way down, right? Like you got in January. Yeah, that's a straight loss thing. That's not really exactly the same thing, but like, yeah. Out at 2019. Well, at least you took the loss eventually. It happens all the time. What's up, Highlander? Yeah, it happens all the time. Right? Thank you. And people don't want to take a loss. Well, if you're not willing to take a loss, did you even know what your invalidation was? Yeah. Yeah, Menwa just dropped a great point. Sold all my ETH at 4.2, rebought at 4K, refused to sell obvious bearish retest at 3.6 because I wanted to break even exit. Sometimes it's better to take a small loss and wait for clarity. 100%. 100%, man. Not even close. But it's the hardest thing for people to do. And it's all psychological. Every single time. This is why, like, for the first conversation, it's all about psychology and really taking a look in the mirror. Are you able to take a loss? And like I'm telling you, V right now is going to eat so many people's lunches. The fifth sub under D, misidentification of luck versus skill. There are so many irrationally confident people right now that have gotten bailed out in this market. Let me give you an example. People that bought right here. I'm buying Bitcoin at 57,000 because Bitcoin to the moon. And it came all the way down to 42.9. 15 grand underwater. But then it went all the way up to 61,000. And those people were like, oh shit, I knew I was right. I'm adding more. I guarantee you there are people that bought 1, 2, 3 times. Okay. And they got bailed out. Well, you can do it here. 1, 2, 3, 4. Enormous drawdown. Got bailed out from a bull market. Enormous drawdown. Got bailed out from a bull market. Enormous drawdown. Got bailed out from a bull market. This was the retest. Here we are. Okay. People that bought anywhere up here are praying for a bailout. Praying. And they thought they were geniuses the whole way, man. Yeah, I bought at 40 grand. Somebody bought at 40 grand and held that shit underwater down to 29. Didn't tell anybody about it. Then Bitcoin went to 57 grand and they were being like, hey, man, hey, I bought Bitcoin at 29 grand or whatever the fuck I just said. 40 grand. Yeah, 18 grand ago. I bought a 40 grand. Yep. And now they're getting smoked. Right? It happens all along. So, like, were you good because you bought at 40? Like, you bought the top in a bull trend and it bailed you out. Okay? It bailed you out. I still think there's a possibility we get this retest here. But we've also had a trend the entire time, too. Like, we have not been range bound forever. You know where you will see crypto Twitter at like an all-time rage level? It'll be amazing. Like, honest to God, I kind of hope this happens. Here, let me pull this into November. Perfect. Just watch. This should be the greatest rage fest in the history of time. Okay? I know we usually rip in Q4. But if you saw some shit like this happen, so many people will go broke. And we have not been range bound. Generally, a range bound isn't 2 times the issue, but like crypto is not exactly normal shit either. I mean, you could also just say it's this, right? And just do this for a while. Because there's enough, in my opinion, there's enough support that exists from institutional buyers to put in a floor that Bitcoin's never seen before. And I don't think that's really being taken into account right now by a lot of like hardcore bears. But we'll see, right? So back to the point at hand. Random rewards, like the people we just talked about, buying and getting bailed out, buying and getting bailed out. I mean, alts, you threw a stone, you got a 10x for like legitimately a month, 3 months in a lot of cases. And are you tracking your results? Who in here? We got 24 people watching right now. At least that I can see. There's more than that through Restream, but on Twitch we got 24. Who in here actually keeps a trade journal? Don't you lie to me. Good. I used to. Why'd you stop, Highlander? Nope. Okay. Nope. Yep, that's pretty common, Dan. What's up, Green Lantern? Yeah, so Menwa, 1,000 plus trades on an Excel spreadsheet with over 10 columns of data. I don't doubt it, man. That's like Menwa generally knows his shit in and out better than most people. That's a lot of no's in there. So Dan started and got tired. Yeah, Josie, that perfect. Okay. I'm about to bring up the conversation about R on tracking your results, and that's okay to pick your spots well. That's generally what I do personally. I've been doing whatever fits. Alex, and what's up? No worries, man. It's all going to be recorded and put out. Crypto Bert says I DJ until I go Valhalla or Hella. Kind of, you go in the same place in some cases. Highlander, you said I can't live with my own decisions sometimes. So that's a really interesting point. I know I'm not trying to like single you out, but like I trade with little old lady strategy now. What do you mean by that? When you said I can't live with my own decisions sometimes. Like you look back and you're like, fuck, I can't believe I did that. Yeah. Yeah, but like coming face to face with that person and having that conversation is how you grow through it, right? But it's hard, man. It's hard. Super hard. I use Edgewonk for mine. I use the offline version of Edgewonk back when it was one set fee. Now they're like everybody else, a subscription model, and I have not used it. So yeah, I use an offline version of Edgewonk to track your wins. So we're under why traders lose right now. No plan, no impulse control, unable to take a loss, misidentification of luck versus skill. And are you tracking your results? I skipped over developing a plan because like I've said before numerous times, I just need to add this in because it'll make it easier. Looks like I could have just resorted. Hey, good for you, Highlander. Good for you. Highlander followed up with, little old lady gave me a strategy that I'm happy to stick with, and it's made me money. Trade against BTC. Not only got my life back, but the strategy stays in place. Yeah, perfect, man. Whatever works for you. Okay? And that's the point of where I'm going right now, trading your plan. I have said numerous times, over and over again, that all you need is horizontal support and resistance. That's where box gang comes from, right? So you could essentially say that we have a couple of different ranges. I am Varant. Good to see you. That's that, right? Is that your strategy? That can be a strategy, guys. What is your plan? Okay. The problem is most people's plan is this. Everybody's getting rich. I don't want to be missed out, or I don't want to be left out. I'm going long. I'm going long 10x. I'm going full T money. That's an inside joke. Like, what is your actual plan? By the way, isn't it kind of weird with me not having music on right now? Yeah, F in the chat for sure. I don't want to get hit with any copyright infringement since I actually am going to edit this one down. But like, yeah, people's plans. It is gambling, Variant. That's the deal, man. Like, most people are gambling. And they've gotten rewarded over the past X amount of months because it has been the easiest market in all time. Buying in small chunks, selling in small chunks. If you actually, here's the thing, I'm going to get to this, but if you actually want to learn technical analysis, you should reduce your size to where you do not give a shit about a loss. Dramatic mood for dramatic times, yeah. No songs, no jams. I could put on some more funeral marches if you guys want. Right? Like, did you even have a plan? Because, like, look, I'll be honest with you. I'm not saying this is a great plan here. In fact, I'd say it's a bad one, but it is a plan. I'm going to buy here. I'm going to sell here. This is the range. If it breaks out above here, then I'm going to long here. If it breaks down below here, then I'm going to sell there. Like, that is a plan. And that is more than 95% of people do. Tell me I'm wrong. Right, so in this scenario, I'm going to sell here. Well, I got here. It actually broke up above, came back down, retested, boom, ripped. Support broke, down. Support became resistance, broke down. Dead. Okay? I can say that nobody around me does that. Yeah, fair enough. All right? Like, when you start a day, like I get up every morning at 5 a.m. I wish I didn't, but, you know, I became a father and I can't sleep past 5. So I have a cup of coffee every single day. And I look at the macro level chart. And I look at a plan. And I go, okay, there's nothing really for me to do. I have emergency stops in place and that's it. Yeah. I was born in Uniswap. All I do is degen. Like, that's fine, man. Like, it's a black swan. Okay, a golden swan because it's a good time. It's a golden swan time in alts. You know, things are great. If you use some semblance of risk management, you can get by with it. But most people don't even have a plan. And tracking your results. I've accidentally pulled this up a few times, and god dang it, that light is terrible. But have you guys actually seen... Yeah. All right, Josie, I'm not ignoring you, by the way. I'll get back to you on that in a second here. But have you guys actually seen these charts and what they mean? So, like, I'm going to define how much I'm willing to risk per trade. If I have a $100,000 account, my maximum loss I'm going to take on any idea is $1,000. And I'm only going to take that trade if my risk, 1,000, is multiplied 5 times for our reward, $5,000, is there on the other side of it. Okay? If you only look for, so this is to, I think it was Josie who was saying that she only, or he, I'm assuming that's a woman, but only trades periodically. If you focus on 5R trades, you can be wrong 83+% of the time. and still be profitable. You got to get less than 2 right out of 10. And you're positive. I try to focus on 5R trades. I'm not saying you have to. I'm going to go down the list. I have this all the way down to 1R. But people don't even think this way. And that's why people lose money. Okay? So if you focus on 5 times risk to reward, you only have to be right 16.67% of the time to be profitable. Like barely, right? Pretty much break even. But like, that's it. 2 out of 10. 2 out of 10, and you're making money. Let's go down. 4R. I'm going to risk 1,000 with my minimum take of 4,000. Literally 20% of the time. You only need to be right 20% of the time to break even. You shit me? That's it. 20% of the time. Even in a bad market, you can be right 20% of the time. I don't know that one, Highlander, but yeah, I'm sure it's similar, right? Let's look at 3R. Risk 1,000 to make 3,000. It's still not absurd. Only 25% of the time. Now, 1 out of 4 is a lot harder than, 1 out of 8. Does it take into account that if you lose more times one after another, 1% trade is like, yeah, look, this first one, it's literally live balance. So I won my first trade, 100, made 105. Then I lost literally 8 in a row. And then I got another one. And my ending balance, 101,733, is more than what I started with. I literally got 2 out of 10 right. So yeah, it does take into account that. These are live balances. Like the math is for real over here. But you have to have a plan. You have to know where your stop loss is. You have to know where your take profit is, and you have to have the discipline to follow it. Okay? You have to have the discipline to follow it. Yeah, I know it is, XO. Here's the thing. In crypto, our risk is bananas. Like, it's always more. So you reduce your size, guys. It doesn't have to be... It doesn't have to be, I'm putting in my full stack, and here's what I want to have happen. If you're like, I don't know, man, this thing's crazy volatile, then reduce your position size, which can give you a larger stop if the top side is there. It doesn't have to be your full amount. I'll get into examples on that in a bit here. But again, 3R, risk 1,000 to win 3,000. You only got to be right 1 out of 4 times. 2R, still only 1 out of 3. 33% required to be break even. But in reality, most of us live here. I'm going to risk 1,000 to make 1,000. And it's really hard to have a win rate over 50%, guys. It is really hard. Because of the reasons we just talked about. Do you have the discipline to take profits when you're supposed to? Do you have the discipline to cut your losses when you're supposed to? It can't be done. Macro, that's pretty funny. Yeah, 100% hit rate, easy? Sure. Most people are on 1R, guys. Most people are on 1R. Are on 1R. Yeah, that's a bad sentence. But like, you look at this, and this is what people do. I don't really like this range here, but I'm going to go with it anyway. People buy right here. We're at 30. Today we hit 35.480 at one point. I think we're going up. It'll go to 40 or it'll go to 30. I'm going to knock out here. I'm going to take profit there. 1-to-1. Which way is it? I don't know. You know, like, and they just do dumb shit, like bad position sizing, whatever. But if you don't think this way, it's really hard to be profitable. Now, we are in a market where random rewards are happening constantly, like legitimately constantly, where people are getting paid and for no justifiable reason. Let's call it what it is. Does that work? No. Yeah, fuck. I thought I could move it over. Airdrops. God, don't even start. Zero risk. Literal zero risk. And people still find a way to screw those up, Zane. Now, could you imagine if there were stock airdrops? Don't tell me splits. You had to have skin in the game for you to get a split. And that's not even really the same thing, right? You like how I doubled up on IM, Crypto F. Yeah, okay. And look, here's the thing. Like, I've talked about on stream how, like, last summer, during, like, Alt Haven summer, I was somebody who was taking on risk where I would, like, buy with an Ethereum, which back then was $200. And if it doubled, I would take out half or it would go to zero. And I was okay accepting that because it was so ridiculous. Things were going 10x. So really, like, you needed to get that right 1 out of 10 times to make up for 9 other losses. It's the same idea. It's the same idea. Okay? And it was essentially when you double up, take out your original money. So I'm getting myself another token to essentially play the game again and hope to get to 10x. It's like a fucking slot machine, guys. Like, don't get me wrong. It's not like you can't do this stuff, but that is not a generational skill for you to make money on. It's not. Right? I can't stare at that screen. I need to get like a black background for that paper. It's blinding my eyes. So Menoir said that he tracks his results. I got to go back. I actually have it here too. 1,000+ trades on an Excel spreadsheet with over 10 columns of data. So you're tracking. Tracking is great. You need to track. You need to look in the mirror and say, am I progressing? Do I have skill? If I lost that trade, doing a post-mortem, why did I lose it? And that's where some of this other stuff comes in, right? I think Menwa might have just saved some with me. Okay. But it's not even enough just to track. I said TA is risk management, and it is, in a manner of speaking, okay? It's not a silver bullet. It's not if this, then that, because that's not how that shit works. I look at it as a way to move the odds in your favor, okay? My name is JM plus EV on Telegram and on Twitter. It's clever because my initials are JMP, and then plus EV is like the idea that I live by when it comes to trading, technical analysis, right? So I need to pull up this chart on expected value, even though it's going to blind my eyes. And I look at technical analysis as a way for me to move the odds of something in my favor and make it worth the while putting on if you are consistent, okay? Because that's the other part. Did you take the trade every time? Did you take it half the time? It is possible for you to be profitable if you are consistent. The reason why Stacked, the people who help put this podcast stream on, have a business is that even when you're good at this shit, applying it consistently is almost impossible. Are you awake 100% of the time? Do you always see it? Do you have some gut feeling that makes you say, oh, not this time, I'm not going to do it this time? As soon as you do that, you're screwing with expected value and expectancy, right? When you do that, you shift completely away from you. Let me give you an example before I get into Steph Curry here. How many of you have gone to a casino and played blackjack? And do you know? Yep. Only in VR? All right. That's actually kind of sick. I would do that. Alex, who raised his hand in real life. After a while, you realize you just lose. Done. I only gamble with crypto. Fair enough. Okay. Here's the thing about blackjack. Lost $100 in one hand in Vegas and stopped. Really? All right. Well, that's actually kind of relevant, S. Curry, for this example here. But in blackjack, you can move the house advantage all the way down to 2%, essentially where you're only sitting at a 49% to 51% disadvantage if you play perfect basic strategy. 2% advantage, that's it. I'll take those odds because you get on a heater, you can make some money. I want you to know that I know and play perfect basic strategy. I'm doing that even knowing that I have a 2% disadvantage against the house. But the only way you close the gap in the house odds is by playing perfect basic strategy. And here's why I'm bringing this up. If you know basic strategy, let's say you have 16 and the dealer's face card is a 7. What are you supposed to do? You're holding 16. The card the dealer has facing up is a 7. According to basic strategy, what are you supposed to do? I don't know, hit. Yes, the answer is hit. The assumption is the most probable outcome for the card underneath the 7 is a 10 or an 11 in the case of an ace. And so on the whole, the odds are you lose, you 100% lose on a large enough sample size if you do nothing. Because more often than not, they're going to be holding a 10 or an ace. There are more 10s or aces or even a 9, which is a push for you, not necessarily good but not bad, underneath there than anything else in the deck. And your assumption always has to be that's what they're holding. Now, if you're counting cards, totally different thing. I'm not going there. Don't take me there, okay? You're supposed to take a card if you're holding 16 against a 7. It's very easy to not take a card when the dealer's showing a 6 and you have a 20. It's very hard to hit when the dealer has a 2 and you have a 3, which you're supposed to do, a 13. You're supposed to take a card. You have to play it perfectly. What I see all the time when I go to casinos, which is not all the time, but it used to be back in the day when I was younger, is you see people who play really, really well. And you know what they can't do? They can't hit on a 16 against a 7. Or even an 8 sometimes. They can't. Well, I might win if I don't hit because they might be holding something else. And if I'm sitting on third base behind you and you don't hit on 16 against a 7, I'm going to cuss in your face. Okay? Like, you are a dipshit. You are. I'm sorry. And the reason why I get upset about that is you're either playing with too much money that you can afford to lose, in which case, go sit down at the $5 table and do whatever the hell it is you want to do, or you're an idiot and you're messing with my money now, okay? You have to play the odds. The plus expected value play is to take a card. It is the harder play, and people can't do it. The problem is, in a single shoe, that does not play itself out. Sometimes that idiot gets rewarded over and over again, even if he's screwing the person who's sitting on third base. And I realize if you don't play blackjack, you may not know what I'm talking about. But like, you have to play consistently, equally, and the odds play out. This is where we get to plus expected value. It also works in poker, by the way. I grew up playing poker as well. I'm not going to get into the nuance there, but this is a great example. Okay, I'm going to read this and we're going to talk about it. The Steph Curry bet. Suppose you sneak into the Golden State Warriors practice facility, interrupting Steph in a free throw session. Strangely, he doesn't throw you out. Instead, he proposes a bet of $5 on his next shot. Steph Curry is obviously a great free throw shooter, but he's getting impatient. Come on, man, it's only $5. Should you take the bet? Your first inclination is probably to decline, and you'd be correct in doing so. In even money, your $5 versus Steph's $5, this bet has an extreme negative expected value. Let's see why. He's a 90.1% free throw shooter. As you can see from the chart, there's two possible outcomes. Curry makes the free throw and you lose $5, which is going to happen 90.1% of the time. Or he misses and you win, which will happen 9.9% of the time. You can look at these two outcomes and you can tell intuitively, just basically, you know this is going to lose. But exactly how much is it losing? Here's where the fun comes. To calculate the EV of this bet, we simply multiply the probability of each outcome as a decimal by its respective result and add them together. There are calculators in poker to help you do this. Miss? The odds of it missing is 9.9%. So it has a 49.5% probability. And for him to make 90.1 times -5, you lose 5. So you add those together, it has a negative expected value result of $4.01. So what do? Well, you don't take the bet. But this is where it comes in and where it makes sense. What if he offers you odds, 20-1 odds? Should you do it now? Well, if I get $100 to his 5, this becomes a pretty drastically plus expected value play. Sam Trabucco did a big thread on this on Twitter the other day about Doge and how Alameda loaded up on Doge. The same exact concept. Essentially, the risk was justified by the reward. It could go 100x, which it did when they put on their position. All you can lose is 1. It became worth it. But the idea is expectancy over a larger period. So let's say you're getting 20-1 odds from Steph. This has a positive expected value. You're supposed to take that bet. But you hand him $5. He makes his first free throw. Of course he did, because he's a 90% free throw shooter. So are you done betting now? Are you done? No, that's not the point. The point is on 20-1 odds over a large sample size, you will come out ahead. On 1, it's not going to do it. So the idea is to have a plan and apply it equally each time. If you do not have a plan, if you go, I'm not so sure this time. I think Steph's going to make it this time, so I'm not going to bet. You keep shooting. I'll tell you when I want to jump in. And then you get the 1 brick or the 2 brick or the 3 bricks when you decide not to play. Now you've completely changed the math. You have to move things in your favor to B plus EV. And you have to apply it equally. And this is where the stuff gets extremely difficult. So, to pull this back full circle, the idea for me with technical analysis is to put enough things together where on balance, if I take that trade each time, doesn't mean I want to win this time, but over a large sample size, I will win long term and my account balance will grow. It's the same idea between hitting a 16 against a dealer's 7. If you do it equally, you have a better chance of winning that situation. Not overall, but that situation. It actually behooves you to do it. But people don't, okay? Every single one. I've heard people in chat say, I need to add more money to my account because my leverage position has gotten away from me. So you're telling me you would rather add leverage to your already down position than accept a loss and start over? Yeah, well, it is the most mystifying thing I really ever encounter. And the reason why it's mystifying to me is that it's so easy. I think it's so easy to put on a trade. It's not hard to click buy. That I think people expect the entire process to be easy. And this is where you hear these stories. How many of you, either personally or people that you know, met somebody that was around in 2017, 2018, and they had paper profits in their account to some absolutely asinine number? I know somebody that put in like $5,000 and turned it into $1 million and watched it come down to less than 5,000. That's my story. 5,000 to $1 million, down to under 5,000. They technically took a loss, even though they went from 5,000 to $1 million. They closed under their initial money in. How? I'll get out on the next one. I am Variant how? I'll get on the next one. It's exactly, I'll tell you how, man. I do think Bitcoin will go up again. I'm not saying it'll break all-time highs. Yeah, Momo. I met a kid today. He got in deep for ADA, 35K. One turned into 134K. It's now at 3K, okay? 34, 134, or 35 to 134 down to 3. It happens all the time. And you ask how it happens. This is how it happens. It's not having control of your emotions. It's not knowing what you're doing, okay? I believe that we will see a retrace on Bitcoin. I do. I'm not saying that it means we're going to all-time highs. I just think that there's enough money in play that it'll happen. So, this is how it happens. Momo, that's a whole different story, and that's hilarious. Because you're right. He internalized that as a $100,000 loss. That's not really what happened. When you buy here, let's say you bought at 60 grand because you thought, all right, there was the dip, and now we're running to a new high. You bought here. And you've since watched 59 grand come all the way down to 29. You know how many of those people did not sell? The overwhelming majority are still holding. The overwhelming majority. Now, I think we'll see a retrace because it's what happens, okay? Like up and down, Fibonacci retracement. We'll talk about it later on. But let's say it does this. And we're sitting at 45 grand. You bought at 60, it went down to 29. Rather than internalizing that as I just got bailed out, it came back halfway, let me close my position, what do people end up doing? They get greedy. Yep. Yeah, Zane, you got it. They wait for an even better exit. Well, we got here. I think the trend's broken. It'll probably get better. So I'm just going to wait for this and then I can get out. But you know what happens? Even if it gets back to their entry, they don't sell. And they're hoping for that, right? So how does somebody watch 5 grand turn into $1 million, turn into a loss? Because the way down, while everybody jokes that it looks like this straight line down, it actually doesn't. It looks like this, okay? It is a slow decline all the way down with little pockets of hope that keep you holding your position. And that's how people turn massive wins into eventual losses. It happens all the time. People don't have a plan. They're just out here firing, okay? They're out here firing. So, this is a lot to unpack. Technical analysis is not a silver bullet. It's the hardest thing in the world because the person you're trading against is you, okay? It has nothing to do with the market. If you ever find yourself being like, those motherfuckers, they rinsed me. Hit my stops, whatever. Nope. You. We just talked about how you could literally be wrong 84% of the time and still be profitable if you had planning. It's not the market maker's fault you're underwater. It's your fault. It's your fault. It's accountability. It's not having bias. It's reading something new every single... Yeah, well, it is Jason King's fault. Let me start on that son of a bitch. It's aside. I'm going to cut this out when I publish this. You have to trade against you. But if you don't have a plan, you don't have impulse control, you don't have emotional control, you think you're better than you are, you think the market owes you something, you're looking for the silver bullet, you're trying to get a salary out of the market, all these things that screw up your ability to execute trades, you're going to lose. Okay? You're going to lose. That's what it comes down to. So that is the not so fun part about technical analysis. I wanted to have this conversation first because I'm working on everything else. And here's what we're going to do moving forward. And then I'm going to get into actually talking about like the current situation with Bitcoin. I can turn my music back on then too. What are we going to do next? I'm going to go through over the next days, weeks, months, and dig into every single one of these things in depth with examples. Kind of like how I showed earlier with the actual like rewound charts on TradingView to show real life examples of how to use these things. How to use high time frame, how to use low time frame, how to determine a trend, not just like, oh, it looks like an uptrend, like an actual technical definition of what a trend is, how to identify support and resistance. Chart patterns. What is a double top? What is a double bottom? What's a bull flag? What's a bear flag? Rising channels, descending channels, head and shoulders, inverse head and shoulders, cylinder, broadening or narrowing, rising wedge or falling wedge. What's a parabolic curve technically defined? Okay. What's a trading range? How to use moving averages, how to use Fibonacci's, volume indicators. Okay. And then this page, price action, what that means, test, breakout, shakeout, failure. I'm going to skip 10. Determining relative strength, how to configure your charts and setups. And then actually I meant to put on here like additional things to use specifically in crypto, not just like the market in general. Because for the record, I learned in the standard marketplace. Okay. Number 10 here, triggers. Even when there are gold-plated setups, people screw up, okay? Even when. This is my favorite one. Where is it, you bastard? Right here, okay? People still screw up. Momo, I'll address. Yeah, I'm literally doing this for free 99, okay? I'll post it, Casper. I'll post everything that I have, so you can check it out. This is a perfect bearish divergence. It's a double bottom. It's a bullish divergence. It was on previous all-time high, resistance, flip to support. But people still screw up the triggers, okay? People still screw up every part of this because this is the dirty part about technical analysis. I can teach you everything that I know. Everything that I know. It does not mean you'll be profitable if you don't look in the mirror and if you don't work your fucking ass off. Okay? I have no problem giving this away. It's fun for me. I'm not going to ask you for a dime. I don't want your money. I don't need your money, okay? People who ask and sell you courses are people that are unprofitable, that don't know how to trade. I don't need you to pay me. I pay myself. I pay myself by trading. I don't need your money. I do have some interest in this, I want to bring more people into the fold. Okay. So how can you pay me? Tell people about it. I like having conversations. I like talking with people. I like building my network. I get a bit of a dopamine rush when I see 20, 40, 50, 100 people watching these streams. I like it when people come into my Telegram channel and ask me questions, okay? Just call it what it is. I'm a human. I like it. So if you find this stuff valuable, tell your friends. Tell them about the stream. Tell them about the Telegram channel. And come in and say hi, right? What's my channel? Yeah, I guess I probably could do a better job of advertising this shit. I just try not to be a whore, pardon my language. But yeah, there's my channel. I just put it in on Restream, so you should have it. That's where I'm going to post all my documentation too. So if you want to see this stuff, I'm not going to post it on Twitter. I'm not going to post it on Twitch. It will all essentially be in my Telegram channel. Actually, I will post it on YouTube eventually, just not immediately. So that's what's in it for me. And quite frankly, like, here's the other thing, like, no cap. I hope you guys learn on this. I hope you take this a step further than I know. And I hope you teach me some shit. Where I post something and you're like, I don't know, Jared. It looks more like this to me. Great. Because I have a neutral bias, I am here to listen to other people's opinions. And that's how I work. So, yeah. I want you to know that I was somebody who paid for classes. I paid thousands of dollars to learn how to trade. Good for you, man. Yeah. $40 a day. Right now I'm at around $10. Now, earlier I said if you have $1 in mind when you open your day, you're probably going to lose. Okay? Momo, I'm saying this on purpose because if that's your goal, you have to look at it on a larger time frame, right? So if your goal is $40 a day, look at it at a monthly clip, not a daily clip. Because there are times in a month where conditions are ripe for you to make a lot of money, and there's times where you're going to get waxed. And if you're trying to force it on a time base, you're going to lose. I promise you, you'll eventually lose. If you're like, oh God, it's 11:25, I haven't made my 40 today. You're going to force a trade, you're going to lose. Okay? All right. Now, let me go back because Josie brought up a good point. She said, I'm assuming it's a she. Josie, can you correct me if you're still here? She might be gone. It took too long. Trying to find her. The little old lady. Yeah, so Josie Linkley, a while ago, like a half hour ago, said, my strategy is to wait till the 200 MA is flipped and then go long. Yeah, so there's the 200 moving average, which is what we're under at this moment. And it capped price, okay? So we broke it, came back up here, and retested it. So yeah, it's concerning. However, there is a slight bullish divergence on the daily. There is a large bullish divergence on 12-hour. And I currently like what it looks like. That's actually pretty thin, but the close low was 34,730. Close here, 33,658. It's technically a valid bullish divergence on MACD. But it's thin. It's not great. Here is a little tip on my divergence entries. We did not speak about Wickoff. I'm not going to talk about it either. It's like the one time it's played out accurately in Bitcoin is right now. Every other time it's been wrong. So I don't really, believe in that. Even if it is accurate, okay? Clocks are right twice a day when they're broken. So there is a lot going on here. It's wedging. There's a divergence. Even when these divergences are active and accurate, a lot of times they will actually come back down and retest the level almost. So that's what I'm looking for right now. Josie's point of us being under the 200 day is one that's worth noting. Okay, the 200 day on almost every single issue, and by issue I mean like stocks, is generally like a pretty good indicator, right? So like you can see here, like Facebook, right? The easiest ticker for me to put in. Here's one. There's another touch. Like it ripped off it and went forward. Okay. Doing the same thing on Amazon right now. QQQ hasn't gotten close. That actually makes me feel good. Yeah, this is a good one. So I know some people that worked for GE and had a ton of stock. And this just kind of sticks to mind about something I used to trade. But I remember when this 200 was battled and broken on GE. And like came down, bounce, came under. Oh my God, we regained it. And then it like you saw this 1, 2, 3, 4 flip on GE, this 200 day, and look what it did to it. Until boom, up we go. So yeah, 200 day is generally a pretty good idea about where things are going. Let me go back to my Bitcoin because this is kind of hard to look at. Josie said we hadn't broken the 200 day without a bear market. Well, I would argue that this was not a bear market. March of last year. It can happen. Obviously, that's kind of a black swan situation. But yeah, every other time is pretty bad. If we are near the top, which we might be, it's hard for me to not think that like this is where we are. Like right here. Like if there still was enough power in Bitcoin in 2017 for them to put in like a fake high, I'd be shocked. That would take institutions completely unloading on us for that not to happen, which could happen. But that's part of the fun in this game, man. You gotta be ready for anything at any given time. So, good point there. I saw a few questions come up along the way. If I didn't get to it, please let me know. Like my plan is to essentially have a basic structure to these conversations ready and previously prepared material and go through it as best I can and take questions along the way. And then just go back and edit it into something that people can go view later on and not have to just do that. Yeah, no, I'm open to, so yeah, Highlander, first off, I appreciate a very respectful way to ask that. Yeah, I'm down to have the conversation about anything right now. So please, alts, Bitcoin, Ethereum, the S&P 500, I don't really care. Talk about whatever you want to talk about right now. Do I see a DeFi summer? Appreciate it, Naga. Thanks for stopping by, man, and being participative. Yeah, that also is helpful when you guys actually jump in. I appreciate you guys showing up and asking questions. Sometimes we'll trigger things I don't remember, just like, look at this shit. I got some gray hair. It helps when you ask questions. Will maybe take me down a path I didn't think about. So please do come back. All right. Do I see a DeFi summer? Awesome. Thank you. I appreciate the feedback as well. Well, I don't not see a DeFi summer, okay? But again, there's a lot to be determined right now. I have like a bunch of books that I'm going to eventually recommend. I'm not going to do it yet though, because I want to give you a base before I start. I'm like, hey, go read this book and we can talk about it. But like, Trading in the Zone by Mark Douglas is one that I'm going to recommend. And like the basic premise of that book is like mastering your own brain and like getting control of yourself, being in a place to have the psychology to trade. And it's absolutely worth the money and the time invested to do it. But most people won't or can't because it's hard to read and internalize shit. But I'm bringing it up because one of the tenets of that book is like you need to like really sit down. You need to sit down every single day and come in with no bias. And what he says in the book is, you don't just think it, but you truly believe that at any moment anything can happen. Like not just like, well, yeah, I guess Bitcoin could rip to 100 grand tonight. It could also go to zero tonight. You need to really believe that, okay? You need to actually think that at any point anything can happen because it informs how you set stops. If you think anything can happen at any time, you don't get smoked by black swans because you would never do that. If you actually thought Bitcoin could go to zero tonight, what would you do? You would change your behavior. I bring that up in the context of your conversation about DeFi summer is that I don't know. Yeah, give me Also, if you're like me, where you're like super ADD, there's an audiobook for it. So there it is. And so I listen to it like once a year. I'll listen to that book. So truly believe that anything can happen at any time. And like you could argue that this right here is pretty much, if you had that belief, how much more money would you have right now? It went down 65% in 4 days. 5 days, 4 days? I don't know. Whatever the hell that is. But on this day, when everyone was saying, look at these accumulation wicks, everybody's going to go bananas. Nobody really thought 65% down from that day was possible, but I assure you it was, and here we are, okay? So my point in that, in the context of your conversation about do you think we're going to have a DeFi summer? Yeah, I think we will, because I think that we will range and go back up. However, I am preparing for it not to happen, and for this to break down, and for DeFi to be a scam, and for me to go back to my bank and say, yeah, I want a 6-month CD for 0.25% interest. I'm preparing for both outcomes. So the good thing about what I see on like this DeFi perp is that this support that goes back to February technically held. You go, but Jared, there's a close underneath it. Yeah, but it ripped right back up. That's a price action tool. Well, then it came down and closed again. It closed it down again on the 29th. Yeah, but then it ripped right back up again. So like you get mixed signals here. If you're reading the market, it closed under twice. It ripped right back up twice. So did that support hold or not? I don't know. I can tell you that I'd like to see it go up again. It challenged this red box here. So to actually answer your question more directly, Highlander, I personally think that from a macro perspective that we will have a nice summer, that DeFi will be a big part of. There's a lot of things happening, but I'm also preparing, to get dunked on. So just head on a swivel, man. Good question. Momo said, is this content for investing or trading? So everybody has a different definition of that, just like people have different definitions of genders now these days. What is investing? What is trading? If you're saying my macro thesis on Ethereum is that it's going to go to 10,000 and I'm just going to buy and hold, then great. Buy and hold, turn off your computer, go, have an Eskimo pie, check back in at the end of the year, right? Like if you think it's going great, then do it. That's you. That's not me. I'm more of a trader who invests than an investor who trades because my background is trading. It is not just value investing, Warren Buffett buying, Target. Or whatever. So you got to take that for what it is. Right now, my hope is, let's range here and let's break up and range there. Sweet, let's do it. What other questions you guys got, if any? By the way, anybody notice this? Like Curve having like a really good day in the face of a not great market day. So is BiFi. Doge annoys me. Unironically, I think Doge is worth accumulating. Like, yeah, CV, convex. Yeah, I don't know everybody was talking about it, but like they've been talking about it for a minute. I don't know if something new changed or whatever, but yeah. So unironically, damn, I forgot about this. I called that shit live as fuck. Yeah, I shorted Dogecoin from 71 cents to I think I closed out. Yeah, here. Like I think I closed out like 24 cents maybe. But Doge is like no joke, potentially gonna rip if we're not done. If like the crypto cycle isn't over, Doge, like what they just announced today, it's going to be on Coinbase Pro. Like that's absurd. So this is accumulation, man. It's right on a level that makes sense. So like all things being equal, I'm gonna start doing like a Sunday video where I just like give my state of the market. I might do it Mondays with the TA classes, but then I'm streaming for like hours on end. But it's also the only day the country club's closed, so like maybe I just do it all in one day because then I can golf every other day. Anyway, I digress. There's like a pretty strong chance that if crypto is not over, Doge goes crazy. And this is where I was going with my point before the sun kind of distracted me and I started talking about golf and daydreaming. There's too much shit like this out there right now that makes me think we're done. Now, that is a contextual opinion. Do you guys remember what happened to alts in 2018? I don't know if Dan's still on YouTube, but if he is, he can tell you. Like, what happened to alts in 2018 when, like, the music truly stopped? I was not there either, but I've done the research. No, the exact opposite of that, Momo. It absolutely drained. Like, I'll see ya. Money gone. Yeah. Naga knows what's up. Like, everything pulled out. Dogecoin is showing relative strength right now. What? King of alts, YFI, King of DeFi is still doing okay. All right. ETC is putting in an ABC reversal pattern. Like, I would never trade Ethereum Classic, but like no shit, guys, we'll get into triggers, and this will be something that I tell you guys about. And I actually posted about it with Matic the other day about an ABC trigger. But this is it, okay? Ready? Oh, you bastard. So AB and C is when you break this level, which it rejected today, okay? So that would be by the way, if TradingView calculates your R for you guys. Look at that right here. R 3.58 on this. But that's not how you'd actually play it, and this is why I said we're going to talk about this stuff. So there's an ABC entry if you feel good about it, if it happens on Ethereum. Classic, which again is my case for this shit isn't done yet, because why is there strength? Okay. You could buy here on the retest of the flip level and drastically reduce the amount of stop loss you need to have in play. Yeah. Okay. So like there's a bunch of ways to do this. So isn't that supposed to drop? I don't know what you're asking. too much relative strength in the market for me to not be interested in staying long. Yeah, Matic I like a lot. Here's the ABC I was talking about on the 30-minute, which is super, super low. But it happened right here, ABC, boom. And now we're kind of doing like a flag high-level consolidation where, you know, we're looking to see what happens. But I am almost positive that if Matic ends up closing, doing one of these guys, I'll see you guys at like $3 Matic. So the point of my story here is there's far too much good stuff happening in the market for me to think that the game is completely done, right? So anyway, all right. Any other questions or thoughts? If not, I'm going to end this and get to editing, and I'll probably add more things in. So there's a decent chance that I'm going to add in more, edit things out and add more things in to the videos after I'm done. But I want to do it with you guys to answer any questions as they occur. Am I into Cosmos? I'm not. Just show up, Momo. Just show up. Thanks, S. Curry. As always, good to see you, bud. I do appreciate you. Hey, founding 2-month sub. I appreciate that, buddy. No, I don't have a schedule like that. So, yeah, so join the Telegram channel. Yeah. How you set targets? To be continued, okay? I'm not going to give away all the goods now on Leonard D5, but if you look at the videos that I posted earlier today, you can see my targets are pretty good. Pretty good. Is that a Barack Obama? What is that? I can't tell what that is. That's pretty funny. All right, y'all. Looks like there's not a whole lot of stuff in the air. I appreciate y'all stopping by. Look for the new videos. I will post in the Telegram channel again. I think I still have it. Netherlands, let's go. Love the Netherlands. Well, Arjen Robben and the national team are my rooting force when I'm watching the Euros. Virgil van Dijk, that's my guy right there. That's Telegram channel. I just posted it on Twitch, but I'll post it over in Restream for anybody else. Check in there. I'll post the updates. I'm going to be doing these like TA class streams Monday or Tuesday each week. And then I'll get back to like hanging out with a taxi and other stuff later on in the week. But I'm going to plan on doing these Monday or Tuesday. So keep an eye then, and I usually post the day of. Sorry, I can't really commit to advanced schedules, but they'll be there and they'll always be recorded. So anyway, I appreciate you all coming to hang out. Let's see if my outro works. We'll find out. Hey, it is. Look at that. Pretty sweet. I never know. Select the countdown timer, top right corner. Pretty sweet. So we got 50 seconds until I sign off.
5 to the 4 to the 3, 2, 1. Word.
A little starter from the bottom. Now we here. Thank you, Casper. Cash-per. I appreciate that. Yes. I always forget about the emojis. I'll do this guy. There we go.